Check Podcasts. Hi, I'm Bruce Williams. I'm the CEO of the Greater Victoria Chamber of Commerce. Welcome to Chamber Chats, coming to you as always from the podcasting studios at the Check Media Group, one of our Chamber champions. In fact, all of our guests on the program today are Chamber champions. I'd like to begin by acknowledging, as always, that I live and work in the unceded ancestral territory of the Lekwungen-speaking nations, the Songhees and the Esquimalt. And Chamber Chats is made possible by the support of Island Savings, a division of First West Credit Union. We're going to hear from somebody from Island Savings today. We're talking today about I and I, not me and me, but I and I, as in inflation and interest rates, which everybody's talking about. It's in the news. Everybody's got their eye on those two eyes. So we're going to talk about that from some different perspective today. Joining us to talk about that, a return guest, Susan Mowbray. Susan is a partner and an economist with MNP. Susan, hi, how are you?
Good. How are you today?
Good. Good. Nice to see you again. Leslie Diensaw is here as well. Leslie is a senior commercial banking advisor with Island Savings. Hi, Leslie. How are you?
Hi. Thank you. I'm good. Thank you.
Great. Nice to have you here. And Carl Mitchell is with us as well. Again, another of our Chamber champions. He is a financial planner with RBC. Carl, welcome to Chamber Chats. How are you?
I'm great. Thanks for having me.
Susan, I'm going to begin with you. You're an economist. You, in fact, have been involved with our Chamber Chats in the past, talking about the State of the Island report from the Island Economic Summit every year. This is going to be an interesting year for that with all the data, isn't it?
It's definitely going to be interesting. As we're coming out of the pandemic, we're starting to see some of the trends emerge that we weren't quite sure and where things are going to land. So, yeah, very much looking forward to pulling the data together as it starts to get published. And I think we'll have some surprises in October when the report gets presented.
Yeah. So Leslie, as a commercial banking advisor, you speak with business people every single day. So let's start by talking about inflation. What are you hearing? What are people saying?
We're hearing a lot, and I feel like it's a little bit all over the map, and uncertainty is definitely sort of the underlying theme that I'm hearing. The other thing I'm hearing a lot is the lack of, as Susan says, data from the past and comparables of numbers of events, that sort of thing that normally dictates sort of how inflation goes or the patterns or what we could see for the coming future. And I'm seeing that it's really hard to compare the past to now, and that data is usually something we can rely on to sort of go forward with and understand what we may be seeing in inflation and in interest rates and that kind of thing coming forward. So I feel like a lot of what I'm hearing is inconsistencies, curiosity, lots of questions, and a lot of people just wanting to know thoughts and what's going to happen and how it's going to happen compared to the past, where there's a bit more certainty from the past to dictate the future, that kind of thing. It's very interesting.
And Carl Mitchell, tell me what you're hearing from people in your day-to-day business.
Yeah, I'm hearing a variety of different people, again, curious, like Leslie was saying there, about wanting to hear kind of thoughts and opinions of what's going on. And, especially when we're looking at it every day or looking at the numbers that are coming out. But I still see a number of people that are skeptical that inflation is going to be declining at a faster rate and that it will be going away in the short term, at least. So, yeah.
That's kind of optimism in there a little bit, isn't there?
A little bit optimism, a little bit of skepticism with it of us not seeing inflation lasting for longer. But I'm seeing it just by people's behaviors of them doing shorter term GICs and solutions and things, and not going for those longer term while we have higher interest rates, which would make a lot of sense if we do see inflation come down. But bit of both.
Yeah, Susan, you must be sensing, again, some uncertainty yet optimism at the same time from the people that you deal with.
Yeah, absolutely. There's a lot of questions. I think one of the things that has really struck people is we were in an environment where we had very low interest rates. I've heard the term historic to describe the current period, and I've no. What we were in before was actually historic. We had this really, really low interest rates and stable inflation. So when this hit, I don't think people really had a good any sort of basis, and this comes back to what Leslie was talking about, so had any sort of experience to be really drawing from, because it's been so long since we had that sort of low inflation, low interest rate environment. And so I think people are just trying to figure out what's the best way or what's the best strategy to deal with this. And this is one of the challenges when you're dealing with inflation, because it distorts decision making. And this is why we want to have that sort of stable, long-term, clear expectations about where inflation and interest rates are going to be. And right now, I don't think we have that.
Leslie, what are you sort of suggesting to people or advising them when they do have that uncertainty about things?
It's hard, actually. And I preface all my words with, I actually don't know. It's hard to, we're talking with different age ranges and different experience levels in the economy as well. So depending on who you're talking to and what kind of experience they've had, purchasing homes, I deal with commercials. So, purchasing businesses, operating cycles, and, as Susan said, historic lows in the last 10 years with interest rates being so low and borrowing costs being so low, almost a non-factor in forecasting for businesses. It's a hard conversation to have. So just trying to create a little bit of consistency and a little bit of staying calm and trying to ride through the storm and really managing your cash flow and money situation carefully, using the GICs and, investing in the equities market and diversifying your cash a little bit and really understanding where your cash is coming from is, maybe not as important as it was, 6 or 7 years ago or even a year ago, because money was cheap and nobody really even considered short-term investments because that wasn't paying anything either. So it's an awareness of your cash is, I think, would be a big thing.
Yeah. Carl, you're helping people every day to move money around. What kind of advice are you giving people?
Yeah, it's, again, I see a lot of people from people who are younger all the way to getting into their retirement or in their retirement. So, it's a personalized conversation, but the most important part is that you're coming in to have that conversation with whether you're on the personal or the commercial side, to see where you're at and what's going to work best for you. Because like Leslie was saying, it's exactly, we have had such low interest rates and growth rates on GICs where it wasn't that much part of the conversation, and people's appetite for risk changing over the last year. So it's very much a balance between what's going to work best for you between the GICs and being invested in, and have an outlook or an expectation of what we can see going forward, because we don't know all the answers, and it's important to have a balance between everything.
So we are talking today about I&I, interest rates and inflation. I want to now talk about the F&F that contributes to that, food and fuel. We're going to do that next. On Chamber Chats today, we're speaking with some financial experts all about your money, about everybody's money, and what's going on with inflation and with interest rates. With us today, Susan Mowbray, a partner and an economist with MNP. Leslie Diensaw is a senior commercial banking advisor with Island Savings. And Carl Mitchell is a financial planner with RBC. Carl, let's start with you this time around. Food and fuel, huge factors in inflation right now. What are people saying to you about that?
Yeah, the side that I hear mostly is that people are just concerned about, they're when they're going and buying groceries every week or every 2 weeks, that what's going out of their pocketbook mostly. Some people are concerned about, just if that will keep increasing mostly and where we'll go from here. The fuel side, I don't hear a lot of people surprisingly talk about it, just that prices have gone up a lot. And it's one of those things that, for work, for everything that we do in life, you pretty much have to pay for along with food. So it's an inescapable thing when we go through these price changes.
Susan, we talked about the State of the Island Economic Report that you do every year that rolls out in October. And you talk about the factors in our economy that drive things like inflation, and interest rates are a factor in that. But food and fuel, again, that's going to be in your report, but you must, again, hear that every day.
Absolutely. I mean, this is one of the big factors right now in inflation is the cost of food, and food is going up. And if you look at the breakdown of where within the food prices that's going up. It's a lot of processed food that has inputs like cereals. And part of that, there's a couple factors that are driving that are global in nature. So number one is the war in Ukraine that has restricted some, exports from Ukraine, which is a very large producer of grain. But we've also had droughts around the world. And then you layer on that increase in cost in transportation, increases in fertilizer. And so it's the inputs into our food are really rising in prices. So these price increases reflect in large part just an increase in cost of inputs that are being driven by global factors that are sort of beyond the control of the Bank of Canada or the Canadian government.
Yeah, we have that big snowstorm in California is not going to help things either. And the storm we had in the Fraser Valley a year ago from November. Leslie, when you're talking with your folks and advising them once again with their day-to-day dealings, what sort of things are you hearing about food and fuel?
Definitely the same. Everybody's worried about the food cost and fuel costs. I mean, myself going into a grocery store, I don't think I spend under $100 every time I innocently walk in there thinking I'm going to buy a few groceries. But I mean, fuel is at the stem of, a lot of it. It's attached to everything that we bring in or ship out. The cost is so high. Trying to keep people calm actually is the biggest thing.
Yeah. Just for context, we're doing this recording on April 12th, 2023. So as we sort of talk about the movement around in the money markets and things, we keep that in mind. But the strategy of the Bank of Canada, of course, to slow inflation has been to rise interest rates. Susan, is that working?
Yes. I mean, that is the tool. That is the tool we have for doing, bringing inflation down. Is you need to inflation is caused because there's too much demand chasing too little supply, which bids up prices. So the way you do that is you slow economic activity by raising the cost of borrowing, essentially. And I think it has been effective. I think we are seeing inflation rates come down. It takes time. All trends are, going in the direction that the Bank of Canada held its rate today. On the expectation that they will meet their target to have a 3% inflation rate towards the end of the year going into 2024 and be back to somewhere between the 1% and 3% target in 2024. So I do think it's working. There's some risks out there that could prevent or could result in increased interest rates going forward in the short term. But I think for the most part, the bank's policy is working.
Yeah, without this sounding oversimplified, Carl, how do these interest rate fluctuations impact people's investments?
Yeah, it's had a lot of pretty big changes in the markets over the past year. We've seen really with it's the biggest movement in bonds and stocks that we've seen over the past probably like 40 or 50 years, quite some time. We haven't seen, it's not very common that we see stocks and bonds at the same time come down at the same rate with each other. So it's really impacted either people's expectations going forward or what their experience is. And it's for some people, it's impacted what their retirement picture can look like as well. It can recover and going in the future, but it's always dependent on what each individual's ability to keep funds invested or sustain that kind of investment, their same plan that they had in place.
Yeah. Leslie, are there alternatives to interest rate hikes to slow inflation?
I don't know if there's actual alternatives. I haven't had an experience where, this is a tried and true method of, reducing inflation and slowing the economy down. I definitely don't have the expertise of Susan, but I feel like it is working on one aspect, but really punishing sort of the average consumer on another aspect. It hasn't, microeconomically in Victoria, BC maybe, it hasn't reduced the prices of housing. So I feel like, although it's a perceived success, I think it's just, basically putting a little blanket on the fire kind of thing. So it is slowing it down, but it's almost just making it more of a pent up. People, I deal with developers and they're doing large developments and, price reduction recently, by, a certain amount of money, it actually attracted sales pretty quickly just by reducing a price of many units, say by $15,000 or $20,000. People are standing on the sidelines waiting and they're just having to pay more for their money. And so I'm not sure if that's a success or not, to be honest.
Yeah. As of course we see inflation happen, prices rise. They may stop rising, but Susan, do you think anything will ever go down in price again?
I think the price changes that you'll see will be the result of changes in things like as an economist, what we call relative prices. And so, as you bring on more supply for things like housing, prices will stabilize. Are we going to see housing prices fall? Probably not. Are we going to see them grow more slowly as you bring on more supply? And it really comes down to the housing market. It comes down to supply. And what's really interesting when you look at inflation is that BC's inflation rates aren't coming down as quickly as other parts of the country. And part of that is driven by housing and the cost of housing here, because we just need more housing. And so if you do that, I think you'll see prices start to stabilize. I don't think you're going to see huge price drops in the housing market. Other services may change over time, where they may not rise as quickly, and so in relative terms they fall. But I don't think you're going to see like a sudden correction in prices going forward.
So when we are talking about inflation and interest rates, those two I's, let's talk about when those big I's or large I's are going to turn into smaller I's. We'll do that next. On Chamber Chats today, we're talking all about things financial and dealing with interest rates and inflation. With three guests, Carl Mitchell is a financial planner with RBC, Leslie Diensaw is a senior commercial banking advisor with Island Savings, and Susan Mowbray is a partner and an economist with MNP. So, when do you think we're going to start to see some changes, Leslie? When will we see concrete examples of when the interest rates will go down?
Well, I wish I knew.
I wish you did too.
Yeah. I'd like to say like a year. About 6 months ago, I was saying 2 years, but there is some optimism out there, and I'd like to see. I see the bond rates they dictate our term rates for mortgages and whatnot. They seem to be continually up and down. They don't seem to be going up in any great magnitude or down in any great magnitude. So if we see shifts, they're really small. So that tells me that we're going to ride this through for at least a year. I don't see the mortgage rates going down significantly within this year. Hopefully some, early in the 2024, something like that. As far as the Bank of Canada, I'm not really sure. I think I'd love to see it go down a little bit and start getting that economy going. But it's a formula that is a volatile formula, and you have to kind of play with it in a really safe way. So I'm not sure what the Bank of Canada has in for us for that. I think that when they did increase it last year, I felt like they could have started earlier in the year and make the sting a little less for us by stretching it out instead of doing these massive lifts, so suddenly as it seemed. So maybe they can do the same going downward. I don't know.
Yeah. From past experience, Susan, what do you think is most likely?
Most likely the bank will start to ease interest rates once they're sure that we're back towards that band. So I think the expectation right now is if there's an interest rate cut coming, it's probably towards the end of the year and into early 2024. And probably I think the markets right now are saying maybe 25 basis points as an initial.
Yeah. Carl, what are your clients hoping for when it comes to this?
They're I guess just hoping it'd be nice for us to again going back to that theme of having some kind of narrative or stability that we can kind of get a good hold from. But I know that or that I would say too that we could see something from what I would think that is going towards the end of the year. We could see an interest rate cut. I think it's largely dependent on when we see a recession or when that will happen too. But it's always an unknown with.
Yeah. So Leslie, when you deal with businesses on a day-to-day basis, you know that their cost of doing business is going up, whether it's supply, whether it's labor costs, whatever it might be. But at the same time, prices are rising because that's how they keep up. But are the margins staying the same? Are people making as much money on what they're doing, even though they're raising prices?
I think on a whole, I could say no to that because of, what we chatted about earlier, fuel, food, everything is costing more. Unfortunately, with the way inflation is, I don't believe that in most operating companies that supply the food and those kind of things, are able to increase their pricing as quickly as inflation. And so I'm seeing the margins being eaten away based on that, because you can't increase your prices, at the same rate as inflation as I wish we could. We're also not we're not seeing wage increases go up that quickly as well. So, but we have a labor shortage, so we're also seeing, these same companies having to pay more money for labor. So it's not just the, supplies, it's the labor, the management, that kind of thing, rent, everything. So every line item on their income statement is being hit. So it's really hard. Having said that, probably the construction, the development side of things is in BC as anyways, seems to be doing okay, depending on where they sit in inventory and when they bought that inventory and that kind of thing. So there's some room on margins on that. But I think as a whole, no, the margins have been eaten away at.
Susan, are we going to have a recession?
That's a loaded question. It depends on how you define a recession. So there's a technical definition for a recession, but I think most people, when they think about a recession, think about their personal situation and have they lost their job. And right now, with this is what's really different right now between sort of past experiences with rising, high levels of inflation and attempts to slow the economy, is we have a labor shortage, so we're not seeing huge increases in unemployment that we would normally expect as the economy slows. So I think there's still enough. It looks like we're not going to see, unless the Bank of Canada is overshot or some other shock hits, that we're going to see what we would classically call a recession. We may see some slowing growth. So we may see a technical recession, but from the perspective of individuals, I think most people won't feel it in the same way as they may have what we would normally think of as a recession, because they'll still be employed.
Well, speaking of the Bank of Canada, the Deputy Governor of the Bank of Canada, Paul Beaudry, is doing an event with our chamber June the 8th, and he's going to be doing the Economic Progress Report for the Bank of Canada. So you're welcome to join us for that event. You can register at the chamber website, which is victoriachamber.ca. Thank you to all three of you for being here today. Susan Mowbray is a partner and an economist with MNP. Leslie Diensaw is a senior commercial banking advisor with Island Savings. And Carl Mitchell is a financial planner with RBC. Thank you all for being here. I'm Bruce Williams, and I'll see you again for another Chamber Chat.